Good morning, everybody, and welcome to today's morning market. So today I'm going to focus in on the oil price, the moves that we've seen over the last 6 months, but more importantly, the moves that we've seen more recently with the oil price now at its July lows. And really, what's our take on this? So firstly, why are there two oil prices? So you may have looked on the internet yourself and you can see two different quotes for the price of oil. So you have one which is Brent crude and the other which is WTI crude. So WTI stands for West Texas International, and it's sourced from the US, where Brent is sourced from various different areas of the North Sea. What you tend to see is Brent's a little bit more expensive, and that's because it's a heavier mix overall. But let's think about movements in the oil price and really what have we seen over the last 6 months. So if we go back to mid-September, that would have been roughly the peak of the oil price. So Brent there was around about $93 per barrel, and that had come up from early summer of around about $70 per barrel overall. What was driving that? Well, you saw continued strong demand from China, from India, and you also saw supply constraints. So you saw both Russia and Saudi Arabia cutting output. But let's fast forward now to where we are today and what have we seen over the past month. So what we've seen is a collapse in the oil price overall. And what's been driving this? So there's a few factors. First factor is really focused on demand. So you've seen weaker Chinese economic data come through, with China the largest oil consumer in the world. Therefore, investors are taking a view that China will need less oil. If we look from a supply dynamic, so if we look at the US, the Energy Information Administration, so what we call the EIA, so they expect petroleum consumption in the US to fall by 300,000 barrels per day this year. And that reversed their previous forecast of an increase of $100,000 per barrel day. Now, what does that mean? So all of that feeds into both supply and demand. So lower demand and also higher supply, which feeds into that lower oil price. So what's True Potential's take on this? So if we reverse back to the end of summer, August time, September time, what we were seeing is some investor nervousness that higher oil prices were going to feed into a reacceleration of headline inflation, and that potentially then could feed into the overall interest rate trajectory. Now, what are we seeing now? So what we're seeing now is investors focusing much more on the tighter easing of oil conditions overall. And what you're seeing is that is affecting the oil price. And what's pleasing around that is obviously a lower oil price is better overall for the consumer. That's everything from me. I hope you enjoyed today's morning markets. I really look forward to speaking to you soon. Thank you.